All right, everybody. Hello. Thank you for coming today. I'm really excited about this event. We've gone to a great place where I said I'm not sure which comes first. Is it the great crowds get the great people, or the great people bring the great crowds? But either way, we're in a really good loop right now with that I'm really proud of. And we got a good one for you today. And I've been telling you in the emails, if you read them and you heard me on my calls, Marc Chaikin has been red hot lately. He, as you see in the picture here, just opened the opening bell on NASDAQ, which was so cool because he developed ETFs for them, which is even cooler. Then he's on James Cramer multiple times, which is really good airtime on CNBC, and just literally he's got as hot as he's ever been. And I'm really happy because Marc and I have worked together for years, and I thought it would be great to have him on to speak to you and show you something that's just breaking the mold. And for those of you who don't know his background, after 40 years on Wall Street as a trader, stockbroker, and analyst, he was the head of an options department for a major firm. He founded Chaikin Analytics to deliver proven stock and analytics to investors and traders. Okay? And there's a whole bio. I'm sure you've seen it. He's the man. And recently, and this is what's so cool, he collaborated with the NASDAQ and Index IQ to bring the Chaikin Power Gauge stock rating approach to the ETF marketplace for the first time. So he's created ETFs for the NASDAQ. And he's going to go over that formula, but he's going to also give you things that you as the individual can take advantage of. And I was just really excited to do this. You are such an amazing audience, and you deserve the best, so I'm happy you're getting it. And Marc, you're as hot as they come right now. And you're such a class act. I love working with you. So I'm excited to have you on, and thanks for coming on to speak to my audience.
Adam, thank you. Welcome, everybody. This is really exciting because it caps a 2-week period where we did ring the opening bell, got a lot of great shout outs from Jim Cramer. Actually, one of the stocks that Jim talked about, we're going to feature toward the end of the webinar. It's going to surprise you. It's a dog that's finally turned bullish. And in the course of the webinar, I'm going to show you a way to use Chaikin Money Flow, which I think most of you are familiar with from your online brokerage platforms or stockcharts.com, that you've never seen written about or described before. It's something we've taught to institutional investors for over 30 years. Going to show you how powerful it is and how you can easily take advantage of it. So why don't we dive right in? And Adam, if you hear anything,
let's do it.
Yeah, if you hear anything that excites you, just stay with it. So, as Adam said, I've been on Wall Street a long time, 50 years. For 45 years, I've been using technical analysis, but always in conjunction with fundamentals to help traders. I headed the options department, as Adam said, at a brokerage firm called Tucker Anthony, 250 brokers, tens of thousands of options traders. Most of them lost money, sadly, and I'll show you why they lost money and how we solved that problem. Along the way, I've been mentored by some of the smartest and most successful institutional investors. Some of them were colleagues and some of them were clients when we had an institutional brokerage firm. The reason that's important is that when I created the Chaikin Power Gauge rating in 2010, I drew on everything I learned from these very successful portfolio managers, hedge fund managers, traders. They all had different styles and different time horizons. So a Chaikin Power Gauge rating was my way of modeling what they look at every day. And you'll see how important that is when we look under the hood of the Chaikin Power Gauge rating. So I like to sum this up the way they do on the insurance commercials. I know a thing or two because I've seen a thing or two. You've been around a long time, you pick up a lot. In this case, it's reflected in the Chaikin Power Gauge rating. So we're going to zero in on swing trading. It's been a very volatile environment. Swing trading is the perfect strategy, I believe, in this kind of environment. You can do it using stocks or options. We prefer vertical put and call spreads to outright purchase of options, but we're going to show you a couple examples of that. And in the webinar, we're going to find out how to identify bullish and bearish trading candidates using a combination of fundamentals and technicals. That's what this webinar is all about. If you're just looking at technicals, you're missing a lot of the information you need to trade profitably. So it's the power gauge for fundamentals and relative strength for technicals. As I said, Unique way to use Chaikin money flow to anticipate future price movement. We're going to zero in on rules-based exits and entries, really critical to have a disciplined way to get in and out of positions. End the webinar by showing you how to play good defense. That means avoiding landmines that can destroy your trading profits and your IRA, turning them around so that you can profit on the downside. And then before we get there, we're going to look at how you can profit from volatility. So I like to start out by looking at the overall market. Now, why do I do that? You can trade without having a sense of what the market direction is, but it's really tough. It's like trying to cross a one-way street in New York without knowing which way the traffic's going to flow. Eventually, you're going to get run over. So I like to characterize the current market as having transitioned from 2017, when we had an uptrend that was on autopilot, to a roller coaster of a correction, and it spooked a lot of people. The volatility came out of the blue. 2017 was the least volatile year in 50 years. And I'd like to look at a one-year chart of the SPY. Now, I know a lot of you trade the SPY either outright or using options. And this reflects the S&P 500 index, the large cap index. It's what most money managers use to measure their performance. It's also the way money managers commit big cash inflows to the market. Let's say they've sold a couple of million shares of IBM following Warren Buffett, and they want to put that back in the market. They may not have specific stocks in mind. They buy the SPY. So we're looking at a one-year chart. You can see that we have a fairly solid uptrend line that's been tested twice, and that in late December and January, what had been a very orderly advance went parabolic, meaning that we just broke out in this straight up move from early January. We're up almost 8.5% at the peak on January 26th for the year. That's a full year's work in 3.5 weeks. Now, when you get a parabolic rise, you know you're going to get a correction. The problem is you don't know when. So the correction started. We define a correction as 5 to 10% down. I'm sorry, that's the pullback. And then it got accelerated by a blow up of some exotic exchange traded product having to do with volatility. So we had a real panic watershed sell-off triggered by margin calls. That was the February low. Happened really fast. Spooked a lot of people. 10% drop, 13% intraday. You then rallied up, and we started forming a wedge pattern, which basically means we've got a series of lower highs and higher lows. The higher lows have come in at the 200-day average, which has been tested 4 times, including just 5 days ago. The upper range is now the 100-day average. So we're really consolidating, and today's action is very promising. We were up 1%, so we're right up at that upper trend line. What I want to zero in on is Chaikin money flow. All through the advance in 2017, Chaikin money flow was big mountains of green, telling you that institutional investors were accumulating the SPY. They were using it as a parking place for money, and therefore Chaikin money flow was strong. That all changed after that waterfall decline in February. So that on all these rallies, Chaikin money flow has stayed negative. That's the pattern we're going to zero in on because it's really profitable in individual stocks. But the general drift is when you get overbought, as you did about a month ago in early April, and Chaikin money flow stays red or negative, that's telling you that institutions are not participating in the move. Stocks have been closing persistently weak day in and day out until the last 5 days. Things are starting to look a little more promising. Chaikin money flow ticked up into the green yesterday. It'll be even more green tomorrow. So we may, and I say may, just be reversing that pattern and ready to break out on the upside. Earnings season was not pretty. Companies that reported great earnings triggered sell on the news mentality. Not good. So let's put this action into the context of the last 5 years. And then you've got all you need to know about the current market environment. Declines of between 5 to 10% we call pullbacks. They typically end in the shape of the letter V, and that's what we saw all through 12, 13, 14 into late 15. You get a decline of more than 10%, we call that a correction. Less than 20%, because more than 20% is a bear market. So in 15 and 16, we got two bottoms in the shape of the letter W. And then we rallied up, broke out, and again, V-shaped bottoms. What's missing on this chart? From this last V-shaped bottom in late 16, that's right before the presidential election, there's nothing between that and the big spike top in January because there were no pullbacks. So buy the dips wasn't even relevant. There were no dips. And then we broke down, and now we believe we formed a bottom in the shape of the letter W. Earnings season is almost over. I think that's a blessing because between now and July, when you're going to get another round of very positive earnings reports, the market basically has no resistance. It's just going to be noise, and that's when the market can easily break out to new highs, which is our expectation. Now, let's put pullbacks into perspective. Since 1945, there have been 75, it's now about 76 declines of 5 to 10%. V-shaped bottoms, they average 6%, they're over in a month. You recover to new highs in a month. When you get beyond 10%, which is where we've been here since February, we call that a correction. There have been now 28 of them since 1945. They last 4 months on average. Guess what? Decline started on January 27th. We're now almost halfway into May, and that's 4 months. Average decline 13%. We've been down 13.4%. So what we're experiencing now is very normal. Problem is, because 2017 had no pullbacks whatsoever, everybody's been spooked by it. And of course, people go on CNBC and they try and find an excuse or a reason. Higher interest rates. The economy is peaking. Korea. Now Korea is not a problem. Remember when Korea triggered sell-offs? Now we've got sort of a peace proposal that may actually happen in Korea. Is the market rallying to new highs based on that? No, because people cherry pick these things as excuses. You've got to avoid being swayed by the headlines. So that's why I spent some time early in the webinar, before we get to specific stock examples, showing you that what we're experiencing right now is normal. In fact, the likely scenario for 2008 that we've been working with is higher interest rates and rising earnings. This chart, courtesy of Bank of America Merrill Lynch, shows you that that's a bullish scenario. Why is that? Well, when interest rates are going up because the economy is strong, that's bullish for the stock market. So how do we know the economy is strong? Earnings are going up. Part of that's the tax cut. Part of that's companies reporting better than expected earnings and revenues. And companies are guiding higher. So we're in the ideal environment. You just got to get through this earnings season and not be swayed by the people who go on CNBC and say, if interest rates go above 3%, we're going to have a bear market. It's total nonsense. History does not bear that out. So we're in a very bullish scenario, and we're looking for new highs by the end of the year in the 3,000 area on the S&P 500. If you don't agree with me, there's a really low risk way to play a downside move that tests the recent lows in the mid 2500s on the S&P. You use a bearish vertical put spread. Earlier today, when the market was at 2070, I think it closed closer to 2071.50, you could have bought a 271 put that expires on June 22nd. To reduce the cost of that, it would normally cost you $490. You sell the 259.5 put against it, called a vertical bearish put spread. Has a very high rating in our options play ideas module. And again, just to mention, these are not recommendations, they're for educational purposes only. What's the profit potential? Put on the spread, market drops 4.5% because you're right and I'm wrong. You make 256% on your money. If you had bought the call outright and you get that same move, you only make 136%. You do that day in and day out, buying put spreads or call spreads instead of the outright option. You're going to solve one of the problems that these people at Tucker Anthony, who I tried desperately to convert to profitable traders, didn't understand: premium erosion, the decaying value of your option. So this is a 6-week option, 4.5% decline. You make 256% on your money. Those are good odds. All you can lose is that $300. Let's say you have a 401k plan with $270,000 in it, fully invested. You're a little nervous. You buy 10 of these spreads for $3,200. It's an insurance policy, about 1.5%. You can ride the next wave on the upside. But I like this for trading purposes. Now, in today's webinar, we're going to show you how to identify stocks like Centene, which is a Medicaid provider. They have figured Medicaid out. They've weathered all the storms with government defunding of Medicaid. They've raised their prices a year ago in anticipation of it. And we're going to show you how to find buying opportunities like we had here in March when one of our signals we call a relative strength buy signal triggered at a price of about 106 on the way to 116. And this chart illustrates another new feature of Chaikin Analytics. A lot of people tell you to keep a trading diary, so you can review what you were thinking when you went into a trade, when you didn't pull the trigger on a trade. We've made it even easier. You just put a note on that particular stock chart. In this case, I noted about 2 months ago that Centene was a potential takeover candidate because I read about that in one of the websites. So I'm going to be watching that along with Humana. And then in March, it started selling off with the market. March 29th, it triggered that relative strength buy signal. We're going to show you how easy it is to find these signals and profit from them. One thing you need to realize is that your biggest enemy is too much information. CNBC, 24/7, blog posts, whatever you use for information outside of Adam Mesh and his great trading team.
Unless you're on CNBC, Mark. If you're on CNBC, it's worth watching when you're on with Kramer.
You're very kind. And actually, we featured Centene back in January when we were on. And look what's happened. Centene in January was down here at about a 98, and in a market that's going nowhere, not even close to its old high, and look what it did. So thank you, Adam. Our solution to information overload, Chaikin Analytics for iPad and desktop. We're going to use charts from Chaikin to give you examples of profitable swing trading patterns. And as Adam said, we've been fortunate enough to be quoted in the press and on CNBC, on Kramer's show. Adam has been really good about acknowledging what we've accomplished. And it's all about combining fundamentals with technicals. When we show you our first chart example, you'll get this in a heartbeat. So Chaikin Analytics and the Chaikin Power Gauge improves your swing trading by giving you a directional edge. That's the missing piece that all these options traders didn't understand. If you have a reliable way to know with a high degree of probability the stock's going to be going up or going down, obviously your options trading is going to be more successful. We do that by combining fundamentals with technicals into a quantitative model and then giving you buy and sell signals for better entries and exits. Now, you may have your own favorite candlestick patterns, crossing moving averages, MACD, that's fine. We've just created a set of signals that traders have been using now for 7 years very successfully. But it all revolves around the power gauge. That is the secret to these successful ETFs. Now 830 million in these two ETFs. The first one isn't even a year old. The small cap ETF, the large cap, launched in December, has 350 million. The reason they're successful is that they're buy and hold portfolios based on the NASDAQ Chaikin index, and the power gauge cannot be bearish to get into the index. That's the secret. In the large and the small cap, it has to have a very bullish or a bullish power gauge rating to make it into the index that the ETF is based on. So a very simple display, but under the surface, there's a lot going on. I like to say that the power gauge is like a Chevrolet with a Ferrari engine under the hood. Now, someone asked me after one of these webinars, you ever driven a Ferrari? And I sheepishly said no, but I've been in some very fast cars, and the engine is really what makes it that. So powerful number crunching, and it can be your GPS during earnings season. It can lead you to very successful earnings trades. Now, at a live teaching event that Jim Cramer had in New York, paid event, by the way, people paid $300 for a day of presentations like mine. Jim Cramer tweeted out, when I got to the slide that you're going to see next, Chaikin Analytics model is the best. Used it at my old hedge fund. So what got Jim so excited? Well, the Chaikin power gauge is composed of 4 primary factors: value, growth, technicals, and sentiment. Value is 35% of the model. That's appropriate because value investors tend to perform well over time. But we also have more sensitive factors, and 2 of them that I've highlighted: industry group relative strength, really powerful. Recent examples, the oil refiners, Marathon, Valero, Phillips, and DeVere. On the downside, consumer staples have been just awful. Soaps and cosmetics, tobaccos, trade them from the short side. The model picks that up. And earnings surprise. When I was at Drexel Burnham in the mid-'80s, I was mentored by a guy named George Douglas. He's still running quant money today. Difference is he moved from New York City to Santa Monica, so not only is his timing good, but he's in a wonderful part of the world. And he taught me, because he did the original research on earnings surprise and earnings estimate revisions over 30 years ago, that earnings surprises come in bunches. So when Micron reports a string of 2 earnings surprises, there's probably going to be 3, 4, and 5. And on the downside, the same thing. So why is that important? Because earnings surprises cause Wall Street analysts to raise or lower their estimates. Academic research, and I'm not a big fan of academic research, but in this case it supports what we're talking about, has shown that earnings estimate revisions are the single biggest short-term driver of stock price movements. So here we have the 20 factors that successful institutional investors with different styles and time horizons, from value investors with longer-term time horizons to short-term traders and hedge funds with very short-term time horizons, look at every day. The challenge is they don't all look at the same indicators, but what they do look at, they look at over and over and over again, every day, methodical, discipline, stock selection, process. So we've successfully modeled what professional investors who run trillions of dollars look at every day, and the model has worked for 7 years because it's based on how Wall Street works. This is not an academic model. I had a laugh. In one of the trade publications, John Hancock had a series of smart beta ETFs. We have smart beta ETFs. And the big headline was based on 20 years of academic research. And I just laughed because models that are built by Nobel Prize winners and academics get us in trouble. That was 2008 and 1998 with long-term capital. That was triggered by 2 Nobel Prize winners building a model on fixed income that had no relationship to the way Wall Street really works. This model is based on how Wall Street works. And the performance is the proof. I love proof points. And the reason is you've just committed an hour of your time to listen to me. I want you to believe that at the end of this webinar, you will come away thinking and believing that there's a fundamental indicator that you can add to your trading arsenal that can make you more than just a technical trader. So over 18 years, the power gauge rating, when it's very bullish, and the Russell 3000 up an average of 20% a year. The very bearish stocks down 1% a year, and that's after a 9-year bull market. Because in 2015, when you had a bear market in energy stocks and in small cap stocks, the average very bearish stock was down over 17%. So you needed to get out of Range Resources and Pioneer Energy and Kinder Morgan and the rails that were moving all this liquid around. You could not stay in these stocks and survive. And the power gauge rating, as you'll see, finds stocks that are vulnerable and makes it easy to get out of them and then look for put buying opportunities. So one final proof point, which was the whole stimulus for Adam calling and saying, let's do a webinar, Mark. This is really something I want to share with my community. We rang the opening bell on NASDAQ, but more importantly for me, seeing the Chaikin power gauge up on the rotating NASDAQ sound and light show for an hour was really the culmination of my career. Very exciting. And it's there because it's performed for 4 years that the NASDAQ Chaikin indices have been live. So let's start out by looking at what a successful trading plan relies on. It's all encapsulated into this pyramid. Successful trading demands a disciplined methodology. We start with the power gauge rating. That's why it's the all-seeing eye at the top of the pyramid. And we also look at industry group and sector strength because that puts the wind at your back. Bottom of the pyramid, just 2 technical indicators, Chaikin money flow and Chaikin relative strength. You're all familiar with Chaikin money flow from stock charts and your online brokerage platforms. We have a unique and visual way to tell you whether stock is outperforming or underperforming the market. And then in that middle of the sweet spot, the buy and sell signals. So we've identified 2 patterns that help you decide which stocks to swing trade from the long side or the short side. On the long side, classic Chaikin bulls. Power gauge rating is bullish. What does that mean? The fundamentals are positive for that company. Stock is outperforming the market and Chaikin money flow is strong, telling you that the institutions are accumulating the stock. So our poster child is E-Trade. E-Trade has really gotten its act together. They're no longer using the crying baby on commercials. That was a really expensive way to get new accounts. The stock has just been killing it. We read the chart from the bottom up. Why? Because the power gauge rating is at the bottom. Fundamentals drive the market. That's what big institutional investors look at before they make a buy decision. So the power gauge rating is a ribbon from red to yellow to green at the bottom of the chart. In this case, the power gauge rating on E-Trade has been bullish since May of 2017, except for a couple of weeks of neutral ratings. That's your directional edge. Right above that is our unique way of measuring relative strength to the market. So when that indicator is green, it's telling you that the market agrees with the model. The stock is outperforming, and so you've got fundamentals and technicals in sync. No matter how good your fundamentals are, whether you use Investors Business Daily, Value Line, Chaikin, Kramer on TV, Adam Mesh, you do a little fundamental work, don't you, Adam? Or you strictly...
Yeah, in my private portfolio, I was very bearish on Snap for fully fundamental reasons.
There you go, and what a dog. So
yeah.
When the fundamentals agree with the technicals, you win. When the fundamentals and the technicals are out of sync, Mr. Market always wins. Then we look at Chaikin money flow and we see that the institutions have been accumulating E-Trade in droves. Normally Chaikin money flow fluctuates around a zero line, goes from red to green and back again. Again, you can find this on your brokerage platforms or on stockcharts.com. Then 2 more. Now we look at price. Once we've determined the fundamentals and the technicals, now we look at the price chart. And what do we see in E-Trade? We see a series of higher highs and higher lows. That's the simplest way to define an uptrend. And you want to be trading on the long side in stocks that are in an uptrend. Then we've got our money flow buy signal. I'm going to explain a couple of these signals. You can go to our website, whether you're a member or a guest. Sounds like a golf tournament, but it's not. And see what these signals are made of. So what's a money flow buy signal? It's a stock where Chaikin money flow is green that gets oversold and then moves back above an 8-day exponential average. Very simple. And the power gauge rating has to be bullish. We're filtering for good fundamentals. That's why the signal works 2 out of 3 times. This is a great signal for swing trading. They last 5 to 10 trading sessions. Then finally, we color code the earnings every quarter to tell you whether the company beat or missed Wall Street estimates. Notice 4 straight, it's actually 6 straight positive earnings surprises. And typically after an earnings surprise, the stock will spike up like it did here in April, then pulls back for 3 to 8 days. It's now moved out and broken out to a new all-time high. This is a classic Chaikin bull. Real nice to know this pattern exists, but we've heard many times, well, how do I find them? Well, there are a lot of screeners out there on sites like FinViz, and used to be one on Yahoo Finance. We have a screener in Chaikin Analytics. What's unique about it is you can pick your own starting universe. You can screen on the power gauge rating. Now, if you believe me that this is really the key to making profits, that's a great feature. And then you can screen on any of the individual factors. So for a webinar I did back in early April, when the market was still going through this sort of W pattern formation, I started with the S&P 500 because I wanted large cap quality stocks with strong cash flow. That's one of the 20 factors in the model. And then I wanted to be above a rising long-term trend with strong price action relative to the market. I filtered down 500 stocks to 16. That became my watch list. E-Trade at 56 on the way to 63. Humana before a big move. Michael Kors before a move from 65 to 72. Marathon Petroleum went from 73 to 83. You get the message. It's a great watch list. You then monitor it for buy signals, and you've got your good entry points. Now, classic Chaikin bear, turn everything I said on its head. Power gauge is bearish, tells you the fundamentals are not good. Underperforming the market, Chaikin money flow is red, not green, telling you the institutions are selling the stock. We're using Tesaro, which is a drug and biotech company. When it started out at the left of the chart, it had a market cap of about $8 billion, now has a market cap of $2.5 billion. Why? Because the stock has dropped from 165 all the way to 45 in the middle of a bull market. So reading the chart from the bottom up, power gauge is bearish. Stock is underperforming the market, so the market agrees with the model. Institutions just can't sell this fast enough. Anytime there's a bid, they hit it. And here we've got our oversold buys and overbought sells. This is another simple signal. I owe this one to Larry Williams, who has done great research over the last 40 years. Stock with a bearish power gauge rating gets overbought, makes a new 8-day high. That's a low risk bearish entry point. There were 4 of them with the stock between 105 and 150. Again, they work 2 out of 3 times. So 2 patterns that are really critical to identifying swing trading candidates. Want to look at 3 other profitable patterns. One we call the dynamic duo, how to spot personality changes, and that special way to use Chaikin money flow that we call stealth, accumulation, and distribution. So what is the dynamic duo? It's the combination of fundamentals and technicals, the power gauge rating, and relative strength. It finds big winners and losers over and over and over again. One caveat, relative strength stands alone as a bullish or bearish indicator. Now, what do we mean by that? You've all heard the phrase momentum stocks. And typically a momentum stock, cloud computing, 3D printing, Tesla at times, is a stock where there's very strong price action, but the fundamentals don't support it. In that scenario, you're on a high wire without a safety net. As long as the stock's moving up, everything's great. But sometimes things change. Analysts turn negative. Competitors come into the marketplace. And that fall from grace is very painful, psychologically and financially. So you've got to be able to spot the personality changes. And we define a personality change as a stock that's gone from outperforming the market to underperforming the market or vice versa. The reason it's important to spot these is human nature tells us that we put our feet in cement. We fall in love with our own opinions and the stocks that we like or like to hate, and we don't see the world changing, and that can be very costly. So here's an example of a bullish personality change. This is Michael Kors. It's in the very strong apparel group. And back in late July, it went from underperforming the market, where relative strength was red. By the way, I see some questions about what time period. We look back over 6 months and then create a stochastic of relative strength. It's very smooth, tends to persist for long periods of time. So relative strength went from underperforming to outperforming when they reported a positive earnings surprise. And it really shouldn't have been a surprise because there were 3 quarters in a row before that with positive earnings surprises. But the market was bearish on apparel stocks back in the spring and summer of 17. So you spiked up. Notice that Chaikin money flow was very strong even before that earnings report. That spike is a combination of short covering and analysts starting to recommend the stock again. You don't want to buy the spike. You want to wait for the pullback and ideally get that first buy signal. In this case, it was our oversold by a new 8-day low with the power gauge bullish. So again, reading the chart from the bottom up, power gauge bullish. Bullish personality change means you've now got positive relative strength. Chaikin money flow is there. And there are a whole series of these. And notice that you've had 2 more positive earnings surprises. Each of them saw a big spike up in the stock, even the one in the midst of the waterfall decline in February. Spiked up to a new all-time high. You then equaled that high back here in mid-April. So there's a bullish personality change. Here's a bearish personality change. Philip Morris. The reason I'm using this is my chief market strategist, Dan Russo, who's a brilliant technician, just came to us from a very fine institutional research firm, made this his bearish stock of the week right before earnings. So back in July, we had a bearish personality change. The stock went from outperforming the market to underperforming. Power gauge was bearish. Institutions were selling, so you're looking for selling opportunities. If they come right before an earnings report, that is magical because you can buy an options position, either a bearish vertical put spread or an out of the money put, knowing that if they disappoint with institutions selling, you've got a great magical trade on your hands. And sure enough, after Dan made this his bearish stock, it was actually a stock of the day in his daily market insights, the stock tanked. It went from 103 all the way down to 80 in almost a straight line. Knowing that there had been a personality change, monitoring it from the downside, you take advantage of that. Now, we're going to spend some time on this because this is really a profitable pattern. If all you take away from this webinar is this one signal, you're going to find winning trades for the rest of your career. We call it the secret sell signal that 95% of traders never see. It's a Chaikin bearish money flow sell alert. Now, as I said earlier, Chaikin money flow normally fluctuates around a 0 line, just like a price oscillator. Above 0, it's green. Below 0, it's red. So here's a chart on advanced auto parts that ends in September of 17. In January of 17, the stock equaled its previous peak of 6 weeks earlier, near the upper volatility band. And look at Chaikin money flow. It never went green. Should have been green, but it stayed red because institutions were selling. Smart money was leaving the stock under cover of strength, and you should be getting out of it as well. It's a chance to get out of a stock near an all-time high. It's the only way I know to take money off the table. And when the power gauge goes bearish and you get a bearish personality change about a month later, now you're looking for shorting opportunities. institutions were selling for 4 months, and you had wonderful short sale opportunities. This is what we call our relative strength sell signal. It's the most powerful signal in our arsenal. You can recreate it. A stock that's underperforming the market, you can find this on stock charts. They have an indicator called SCTR, or any relative strength indicator on your online brokerage platform, or on Chaikin Analytics, where we bring everything together on one screen. Stock that's been underperforming the market rallies up, gets overbought above its 21-day average, and drops back below the 21-day average. When it drops below, that triggers the relative strength sell signal. These signals backtest 70% accurate. And the beautiful thing about these signals is their duration is 4 to 8 weeks. Now, what that means is if you're trading options, you can buy a 30 delta option, you can buy a 70 delta option. You can go in the money or out of the money, knowing that you're not under the time pressure of an expiring option and shrinking premium. You can buy options with more time and take advantage of big multi-step moves to the upside, and in this case to the downside. So this chart ends with the stock at 94. The ultimate low was 78. So from the money flow sell alert at 170 to the bearish personality change at 150 to the signals at 140 and all the way down, this pattern alerts you to very profitable stocks. Now let's look at a chart that signifies and embodies everything we've talked about. In my weekly market insights on September 24th, I made DR Horton my bullish stock of the week. It was 36.90, and I'd like to walk you through what I was thinking when I did that. I take these weekly recommendations very seriously. So again, read the chart from the bottom up. Power gauge is bullish, outperforming the market, so the dynamic duo is strong. Institutions really can't get enough of this stock. How do we know that? Chaikin money flow, big mountains of green. It had given an oversold buy signal. I actually recommended it here at 36.90 when it pulled back to its 21-day average. This was September. It went in a straight line from 36.90 to 53. For most of that move, what was Chaikin money flow doing? It was green until you made that drive to the final peak at the upper volatility band. Look what Chaikin money flow was doing. This stock went from institutional accumulation to institutional distribution, and you got a bearish money flow sell alert right at the top. And then the stock started to break down. And when it breaks down, you want to avoid it on the long side. Even though Barron's wrote up the home builders, in the middle of that down move from 53 to 43 at about 49, the stock and the industry and all the stocks in it have gone nowhere. Everything looks favorable for home builders. We thought that when we recommended it. This is why you need to have indicators that go against the crowd. So bearish money flow sell alert, and then a bearish personality change. You're no longer interested in DR Horton or the other home builders on the upside. They'll come another time. It's not now. And every report on the housing market is positive. You don't care. You're looking at a chart that gives you an inside view to what's really happening. So one more example, and this is another one from Dan's Russo's daily morning insights. He recommended selling Trimble Corp back here at 37.30 in February when it gave that overbought sell signal. Power gauge bearish, underperforming, institutional selling, weak industry group. Everything lined up. I piggybacked on Dan and made this my bearish stock of the week in Chaikin Market Insights back here at a price of about 35. Yesterday, or 2 days ago, bearish earnings surprise, negative reaction, stock gap down, opened at 32.63. We closed out the short recommendations. And you have an example of what we call a mini money flow sell alert. Never even got close to the upper volatility bands or the old high, but you got overbought above the 21-day average, and look at Chaikin money flow, stayed negative. Now that's a pretty big move. You went from 36.50 to 39.50. In this case, you went from 34 to 37.50. Chaikin money flow shows you that the institutions didn't care. They were selling into strength, and you can too. So this is a very recent example of that. Now, everything we've been looking at is what Warren Buffett calls the fat pitch. He's famously said that they don't call balls and strikes on Wall Street, so you don't have to swing at every pitch. You can wait for your pitch. He calls it the fat pitch. We call it the ideal setup. The only thing missing, the buy and sell signals. For timely pinpoint exits and entries, we have 6 pairs. We've looked at 3 of them so far in the webinar. Now, as with the classic bears and classic bulls, you've got to have a way to find them. So in Chaikin Analytics for iPad and desktop, we have dashboard alerts. For any list, ETF, index in the system or that you create, every day when you sign on, you see the stocks that have triggered bullish and bearish signals. On April 5th, for a webinar that I did, I took this screenshot. Marathon Petroleum had triggered a money flow buy at 72 on April 4th. Adobe had triggered. Apple, a couple of other stocks that have been strong. So let's look at what happened to Marathon. Here's the signal. Money flow buy, 72, straight line in 3 weeks to 83, with the price of crude oil approaching $70 a barrel. They announced the takeover bid for Andavir. It's going to make them the largest refiner in America and retail seller of gasoline. And you've got a great trade because you're trading on a discipline that's based on proven analytics instead of trading on your emotions. Always makes sense to follow the signals. Now, a new feature that we just rolled out on Monday is an email alert. If you opt in and you're a Chaikin Analytics member, every morning you don't have to hunt for those signals. They come in your email. So I did a webinar on Tuesday, and I took a screenshot of the signals that I got that morning, and one of them was EVHC. I happen to be following that, and Vision Health. It was a potential takeover candidate that people believe was not going to get taken over. Gave me an oversold buy signal at 36.90 and told me that they had reported a positive earnings surprise. So this is the antidote to information overload. It's all there in your email. Now let's look at what happened to Envision Health. After that oversold buy signal, you actually could have gotten in not at 36.90, but on the opening at 37.30. The New York Post ran an article yesterday saying KKR was going to make a bid, $11 billion bid for the company, and it gapped up today, up 6%. So it's gone from 36.90. Could have gotten in at 37.30. I know it's frustrating when you can't get in at the price, but that was actually a sign of strength. Went from 36.90 to 43.70 on this morning's opening. That's a good trade. And this new alerts capability put it right in front of you. Now let's look at 3 recent examples of good swing trading opportunities. We're in a volatile market. It's created a lot of fear, uncertainty, impatience. People are just itching for the market to break out. Hasn't done it yet. But this kind of volatility creates opportunities. If you follow the power gauge, let the industry group strength or weakness be your guide and use a rules-based exit and entry. All 3 of these examples were bullish or bearish stocks of the day that Dan Russo picked over the last 2 months. So Interactive Brokers, we've already seen that E-Trade in the discount brokerage space is very strong. So is Interactive Brokers. So Dan put out a buy recommendation with the stock at around 65, and over the next 5 weeks it spiked up to 80 and broke out to a new all-time high yesterday. Again, looking at the chart from the bottom up, how did Dan pick it? Use the screener, strong industry groups, power gauge bullish, outperforming the market, looking for a buy signal, That's a good swing trade. Valero, we talked about Marathon, the oil refiners are en fuego. They're just on fire, and they have been for 6 months as the price of energy and crude oil has been moving up. So buy signal, Dan waited for a pullback, recommended it here at 90 on the way to 115. Positive earnings surprise in the middle of that move. Analysts raising their estimates. How do we know that? Our earnings indicator has a green exclamation point that tells us that analysts are raising their estimates, and the next earnings report in July 26 probably going to be a good one. And then on the downside, just like Philip Morris, which is in the consumer staples sector, was bearish, so are the soaps and cosmetics stocks like Procter & Gamble and Colgate. So again, Dan put out a sell signal here in April with the stock at around 72 on that rally with the power gauge bearish, and again, institutions selling, no green money flow there. And the stock reported a negative earnings surprise, dropped from 72 to 62. That's a big move in a conservative stock with a big dividend. So these are examples of how you can swing trade in volatile markets using this disciplined approach that we've been talking about. So let's end the webinar talking about good defense. We were fortunate this year that the Eagles finally came through after, I don't know what, 50 or 60 years without a title. The reason was good defense. Sure, they had a trick play to get into the end zone, but it was a defense that stymied Tom Brady in the last few minutes of the game that won it. But good defense leads to good offense. So how do you play good defense? Herb Greenberg, who writes for TheStreet.com and is on CNBC, penned an article in January of 14, 4 years ago, saying it's the stocks you don't own that matter. So take a second to think about that. We're all trying to find the next big winner, the next Facebook or the next Amazon. In reality, to make money, you want to avoid the losers. So avoid stocks in weak industry groups. Know what stocks not to buy, and we're going to see a great example of that in a minute. Improve your performance by eliminating bearish rated stocks from your 401k plan. Spot bearish personality changes because they can help you save money, protect assets, and then help you find great put buying opportunities, and use bearish put spreads on weak stocks to make money on the downside. So here's an example of a stock that you didn't want to own in 2017-18. Albemarle Chemicals in the S&P 500, weak industry group, in a downtrend, bearish personality change, power gauge is bearish, and what were the institutions doing? Red Chaikin money flow on the rallies tells you they were selling into strength. So we use the relative strength sell signals to go short the stock, or better yet, buy bearish vertical put spreads. You had two really great signals. One of them came 4 days before an earnings report, bearish earnings surprise. You spike down, take your profit. Don't be greedy. Take at least 50% off the table. But when they give you a gift like that on a down opening, take it. Now let's have a little fun. When I was in that live Kramer teach-in event and on a 1-hour webinar that I did with Jim in January, I said that bottom fishing is the most expensive sport in America. We all do it, and we're all sorry. So what I did here was I took the key indicators that we've been talking about, power gauge, relative strength, and money flow, on a stock that you all know. And if you guess that this stock was Under Armour, you are right, because this chart that ends in June of 2017 shows Under Armour going from 42 to a low of 18 with all these three setups, the ideal setup in place: bearish power gauge rating, underperforming the market, institutions selling. You look for those relative strength sell signals, they work 70% of the time, and you make money on the downside. But on CNBC, all through 2017, you heard market gurus telling you that Under Armour was cheap. They've just signed a deal with Steph Curry. $126 million sneaker deal doesn't sound cheap to me unless it's for LeBron James or Michael Jordan, but that was the rationale. So the stock, which was trading at around 21 when I took this chart, looked cheap. Now let's update the chart. The ultimate bottom, $11. Nobody knows where the bottom is in a stock that's got persistent distribution. So bottom fishing didn't make sense. Now what's happening is the stock has started to outperform the market, and although I wouldn't buy it because the power gauge is neutral, not bullish, notice how the relative strength buy signals are actually working. Got a move here from 1550 to 1775, 1570 to 1850. Personality change tells you to stop shorting Under Armour, and if the power gauge turns bullish, then maybe you have a buying opportunity. One last example. Again, let's look at the indicators. This one, the power gauge is neutral all year. But the stock was underperforming the market, and look at that persistent distribution. Does anybody have a sense of what this stock might be? Well, if you guessed General Electric, you nailed it. And this is the one stock that Jim Cramer has publicly said, biggest mistake of my life, own it, my charitable trust, just didn't get it right. Relative strength sell signals all the way down could have gotten you out of the stock in the mid-20s and short. And look what's happened. Jim featured this on Off the Charts last Tuesday, a week ago Tuesday, right after the bell ring. Power gauge turned bullish a month ago. Jim couldn't believe it. And the stock has been outperforming. It turned bullish with the stock at around 14. Stock was trading at about 1480 this morning. Haven't had that bullish personality change yet, but the power gauge is bullish. The analysts are still bearish on this. Power gauge is bullish. So a total turnaround in a stock that's been underperforming with a neutral or bearish power gauge rating for the last 2 years. Very, very powerful indicators to help you make money. So we're going to end the webinar with the stock that I love to hate, Tesla. There's only one problem: very hard to make money on the downside in Tesla because Elon Musk just makes up stories on the earnings call. This time he went too far and the analysts really held him accountable because they got pissed off. Called one of them stupid, said these questions are ridiculous, I'm bored by them. Big mistake. They've got bigger problems than that though. So how do you make money in Tesla on the downside? Well, you wait till it gets overbought like it is today. Was trading at about 311 earlier today, and you look for a bearish vertical put spread. So in this case, buying the 312.50 put, selling the 265 put against it reduces the cost from $1,965 to $1,420. You've cut almost 25% off the price of the downside option. And look at the returns. If Tesla drops from 311 to 265 between now and June 22nd, buying the call outright, you make 140%. Buying the vertical bearish put spread, you make 240%. That's a big difference. That's the only way I know to make money on Tesla. You've got to do it when the stock is strong because the power gauge is bearish. So everything we've looked at added up to a platform that Benziga named the best ideas platform last May at their annual awards in New York City. And it's all in Chaikin Analytics, which is a proven stock selection system. Comes fully loaded with our multi-factor model, the power gauge rating, which the ETFs are based, and our stock discovery engine, which is what we won the best ideas platform. A great way to generate instantaneously ideas that match your preferences. If you like Marathon Petroleum, it'll find 4 stocks like it for you. If you're bearish on Tesla, it'll find stocks like Tesla. So it expands your horizons. It gives you new ideas. In addition, you've seen the screener and the options play module. And all of this retails for an annual subscription for $2,195. You can go to chaikinanalytics.com/mesh. But as a special for Adam and his very loyal band of followers, like to offer a webinar special and take $200 off the price of Chaikin Analytics, an annual subscription, reducing it to only $1,995. Again, chaikinanalytics.com/mesh. You can dial the number on the screen. This offer expires on Sunday, May 13th. Now, I haven't included a lot of testimonials on the webinar. They are important, but I really wanted to make this a really meaty teaching experience. One that I think is particularly important, 10x return in 5 days. In the 5 business days I've been using Chaikin, I've paid for these subscription over tenfold. Obviously, he's trading options. These initial results are nothing short of astounding. Please extend my thanks to the entire Chaikin team. There are 26 of us in Philadelphia dedicated to your success. So in addition to everything we've looked at, you get our intraday charts, our earnings alerts, my weekly market insights with a bullish or bearish stock of the week. Plus, as a Chaikin member, you get member-only access to our weekly strategy webinar with our market strategist, Dan Russo, unlimited coaching, including one-on-one coaching if you need it, and Dan Russo's daily morning insights that come into your inbox at 8:45 every morning with a bullish or bearish stock of the day. Really powerful bonuses that come along with the Chaikin Analytics platform. So as a final incentive, so you can get the benefits of Chaikin Analytics, if you subscribe by midnight tonight, we'll take an additional $200 off the cost of Chaikin Analytics, a $400 discount, reducing the price to $1,795. chaikinanalytics.com/mesh or call 877-697-6783 if you have any questions. We've got our whole customer support team standing by. So with that, I'd like to thank Adam and JJ for
One sec, Mark. One sec, Mark, because I got some questions coming in.
Oh, there you go.
So, first of all, Curtis wrote in, "I can vouch for it!" ! Gary wrote in, "I have to leave. Make sure you save me the link," or hopefully you got it. I have some more questions. I just wanted to say a couple of things. One of the interesting story about the Eagles. So someone I was friends with from high school, pretty good friends, we used to wrestle together and stuff, is the GM for the Eagles now, Howie Roseman.
Oh, come on.
I texted with him after they won the Super Bowl and congratulated him, and he's like, "We got to go to drinks and celebrate." So I was, even though I'm a Giants fan, I was certainly rooting for the Eagles because there's other guys from my high school that also work under him as part of that team. So our whole high school was celebrating that victory, which was really cool. And then just as another funny aside, on that Tesla phone call, I was reading the review, and they were showing 3 examples of where he really told off the analyst, and one of the analysts was my fraternity brother at Michigan. So just funny stuff. I was like, and what's funny is, and I mean to be respectful, but the guy was kind of a boring guy, never had a lot to say, and Elon Musk said to him, "This is so dry, it's painful. Next question." I was just laughing because I'm like, yeah, that's about right. Anyhow, Gary wanted to know, what was that Tesla play? What was the Tesla play you were talking about?
That's a bearish vertical put spread, buying the 312.50 put and selling the, I think it was the 260 put against it. So your goal in these trades is to reduce the cost of the long put option, because the put option that you sell against it gives you agita if you're long, because you get premium erosion. So this is one of the ways to solve the premium erosion problem. You buy the 312.50 put, you sell the, in this case, the 265 put against it. That put is selling, believe it or not, for $545. Well, that's a long way down for an out-of-the-money put. So the spread and the strategy works over and over and over again. It's a way to trade options, lower your risk, and increase the probabilities of success and your returns. It's I've come to be a big fan of bearish vertical put spreads.
Doug said, "I'm a Chaikin subscriber and a firm believer." Ray wants to know, can you screen for stocks with weekly options?
You can screen for stocks with options. Using options play, you can zero in on the weekly options. We don't specifically say, okay, these stocks have weekly options. They tend to be the most liquid options. So if you screen for stocks with heavy volume or large cap, you're going to find the stocks with weekly options. But then once you get into options play, you can use any strategy you want. And weekly options are tough, by the way, Ray. So you want to use some of these indicators to really put the odds in your favor.
Bob said, I'm a Chaikin member, and to say that I'm pleased would be a serious understatement. Thanks, Bob D. And, you know, that's what I want to hear, Mark. That's why I was so excited, and that's why I asked you to come and speak to my audience, is because, as I said, you're a class act, you're the real deal, you're red hot, and, I mean, there's not that many. I mean, Tom Sosnoff, I'm sure you know him, is another legend. I love having him on. Guys like you, him, people like literally go out of their way to come on and say, I'm a believer. This guy's great. That's all I want to hear. I want to deliver the right message with the right people. You know, Mark was asking me before the call, like, how you doing? I'm like, never been better. My focus is just trying to make people as happy as possible. So, you know, I hope you guys are really benefiting from this. And it seems like there's a lot of happy people. And first of all, thank you so much for giving a discount to my audience. That makes it even better. That was nice. Peter said, do you recommend just simple calls or put options as opposed to vertical spreads? It's probably like a house guest choice, right?
Well, buying calls and puts outright is a very difficult game because of premium erosion. If you're buying deep in the money calls and there's no premium erosion, a very high delta, that's great. I prefer the vertical call and put spreads. I think over time, if you do a lot of options trading, it really shows up in your bottom line. I mean, occasionally you can make a big score, especially during earnings season, with an out of the money put option on a stock that has a bearish negative earnings surprise. But I've come to embrace vertical spreads.
Curtis said, this is to you, Mark, don't forget to mention what a time saver the platform is, how it saves tons of time by consolidating all the information from multiple sites in one place. So that's a good thing. Yeah, and so the people are saving the extra $200 by ordering today. Is that what it is?
Yep, by midnight, you'll have $400 off. Anybody has any questions, just call that number. They'll answer them. And Adam, this has just been great. Really feel like you've taken your game to another level by just zeroing in on what's important for your members, your community, and happy to be a part of that.
Yeah, just a couple more, because I always promise people with me that I'll try to answer every question if I can. So if you don't mind, just a couple more. Some are nice comments. Chaikin Analytics gives you some of your life back by saving the time it takes to find and research trades. Peter said, thank you. And then Juan, I saw a question from Juan, said the PEG ratio. He said, not enough people talk about the PEG ratio. What do you think about that? I don't even know what that is.
Out. Well, it's price to growth. It's the PE ratio versus the growth rate.
Okay.
When I was building the Model 1, that was one of the factors. I tried 200 factors, and PEG ratio, although it's a accepted measurement, didn't test as well. We use the forward PE ratio. We look at the next year's analyst estimates, where a stock is selling relative to that. It's sort of like Bobby Orr, who used to say, I skate not to where the puck is, but to where it's going. So we look at the forward earnings estimate, consensus estimate, and we rank all 3,000 stocks by the PE ratio relative to the forward earnings projections from Wall Street analysts. And that has worked better for us than the PEG ratio.
And now, final four questions. I recognize all these names, so I want to make sure that I get their questions. William said, is price grandfathered in? And what he means, what I do is if you pay a price with me, your price will never go up. So if they're getting this discount, does it go up or do they stay locked in at this price?
The renewals stayed locked. And by the way, we have over a 70% renewal rate. Adam will tell you how hard that is to achieve in our business.
Yep, and that's why I talk about mine too, because I'm proud of it. And so yeah, I do the same thing. I never raise your price, and that's why he's asking. So William, no, you're locked in. Your grandfather in. Gene said, can we access a slideshow from the presentation? I don't think so. I'm not sure. Barbara said, apart from the alerts and indicators, does the program give you a specific action to take on the trade? So does it recommend a trade, or or you got to take that yourself?
Well, what most people do is they figure out what their trading style is. If they're swing trading stocks, then if there's a relative strength buy signal or an oversold buy on Envision, that's their call to action. If you're an options trader, you click on options play. It automatically knows what the power gauge is. So if the power gauge is bullish on Marathon, it'll give you a bullish strategy. And then in Dan Russo's morning market comments, he's got a specific buy or sell recommendation every day. And I do a bullish or bearish stock of the week. So we're a believer in teaching you how to fish, not feeding you a fish, but in the market letter every morning and in my weekly market letter, you get a specific buy or sell recommendation.
And last one I'll say for now, Robert said, will this work with ETFs and indexes?
Oh, yeah. In fact, we're going to be coming out with a power gauge rating for ETFs on July 1. It's been a 3-year research project, and it's a combination of fundamentals and technicals. We roll up the power gauge ratings for the individual stocks within an ETF, and then we do the technicals on the ETF. And so right now we have relative strength on ETF, and I got to tell you, that's been extraordinary. Relative strength on the energy ETF has been bullish now for four months, 3 months, I believe, and they've been a real standout. Relative strength persists in industry groups and sectors. So if you're trading select spider sector ETFs, absolutely. Chaikin money flow on the big index ETFs like SPY, but it's been working just on relative strength and money flow. Once we fold in the fundamentals, it'll be unique. There's nothing like it. And that's coming July 1. So if you subscribe now, you're going to be really comfortable with the system. When we roll that in, it's going to be complete in terms of both stocks and ETFs.
Great questions, everyone. And I see my name in the link, and that just means that you're saving $200 by using it. So I'm cool with that, and I appreciate that. So it's Chaikin Analytics, www.chaikinanalytics.com/mesh. Will, do me a favor, just shout out that link for everyone again if they want it. And yeah, that part of my thing is to only bring you the best names in the industry right now, because your time is valuable, our time is valuable, and I think we hit the nail on the head today. So proud to have you on, Marc. And, you know, when I see the success you're having and your reputation just growing as it should, although it's starting at a high brow, so that's tough to do, but you're all over the place. And I really love to see it. So keep up the good work. I love having your people come on and say what a great job you did. And next time you're passing by my office, you got to come up, all right?
Well, I was there yesterday. I was going to suggest you come down to Philadelphia, invite Howie out for a drink, and I'll pay.
All right.
Yeah,
and then you invite James Kramer. We'll all go. You bring Kramer, I'll bring Howie. Deal?
I will bring Kramer. He's a Philadelphian, and he's down here periodically. So we'll make it a foursome. That'll be great.
All right. Maybe throw some golf in there too.
Yeah. Well, I am off to Italy tomorrow to reconnect with my wife, who's been over there for a week. So this is my swan song. I'm now officially on vacation.
Enjoy. Thank you, everyone.
Thank you, Adam. This has been great.
Bye.